The existence of a business is a fundamental issue under Australia's income tax system. The reason it is a fundamental issue is because receipts from a business can be income and therefore assessable income, and expenses in operating the business can be deductible. On the other hand, if an activity is not a business but is only, for example, a hobby or pastime or leisure pursuit, receipts will not be income and expenses are not deductible. Difficulties can arise because many activities that are conducted for personal enjoyment, for example, collecting and trading antiques and playing sport, can also be conducted along commercial lines to make a profit. Note the practicalities of taxpayer self-interest. Where losses are made, the taxpayer usually wants to argue there is a business. And where profits are made, they usually want to argue there is no business. So, how do we solve the existence of a business question? The answer is we can be guided by court decisions. The starting point is that the question is one of fact and degree. This means it depends on the large and general impression gained from the facts. In deciding the cases, the courts have developed a whole lot of criteria which we should use. A very good summary of the criteria is found in the Australian Taxation Office, ATO, Taxation Ruling TR 9711/11. Some of the criteria are more important and carry more weight than others. Additionally, the criteria can be interlinked and/or overlap. Profit motive. This is a key criterion. Even where a profit motive exists, it appears that there must also be a reasonable or genuine prospect of making a profit. Indeed, there is at least one case where a taxpayer continually made losses and yet was held to be operating a business. DAF versus FCT. The reason is that other criteria pointed to there being a business and that the taxpayer genuinely believed the activity would generate profits. Intention of the taxpayer. This is also a key criterion. Does the taxpayer intend to operate a business, or does the taxpayer intend to pursue a hobby, pastime, or leisure activity? Significant commercial purpose and commercial character. This is also a key criterion, and it tends to be a collection of other considerations, such as 1. Whether the activity is conducted in a similar manner to how an indisputable business is conducted. 2. Whether a business plan exists. And 3. Whether advice, including expert advice, has been obtained regarding the activity. Some of the other criteria to consider are 1. Is there repetition and regularity in the activity? 2. Is the activity carried on in a systematic and organised way? 3. Time taxpayer dedicates to activity. And 4. Whether taxpayer has someone else carry out aspects of the activity for her. There are two categories of activities that need special mention. They are sport and gambling. First, sport. This can be a difficult area. At the two extremes, the existence of a business question is usually clear. The person who plays sport mainly for recreation and/or merely keeping fit is not in business. This includes those players who receive some money for playing. For example, Australian rules footballer that receives $140 per game. At the other extreme is the full-time professional whose main source of receipts is his or her sporting activity. This would include tennis players on the professional tennis circuit and golf players playing on the professional golf circuit. The activities of an A-League players, AFL footballers, and NRL rugby league players, albeit they will be employees of their clubs, will be an income-earning activity. The High Court case of FCT versus Stone, world-ranked javelin thrower, was a very difficult case for the courts. However, the case may provide guidance on when a sports person's activities amount to a business of turning athletic talent to account for money. A big factor in reaching the business conclusion in Stone was that she was in receipt of sponsorship money from commercial businesses. Second, gambling. Gambling can cover many areas, all the way from buying lottery tickets to betting on horse races and sporting events. Our focus here is on gamblers and not those taxpayers that provide betting services, for example, a casino or Bet365. The starting point is that it is near impossible to be in the business of gambling. There are two very limited exceptions. The first is where the taxpayer's activity of gambling is related to or incidental to another activity conducted by the taxpayer, which is unquestionably a business. For example, a bookmaker who gambles, horse trainer who gambles. In this case, there is some chance that the gambling itself will amount to a business or be part of the unquestionable business carried on by the taxpayer. Prince versus FCT may be an example of this situation. The second is where the activity of gambling is so highly systematic and organised that the taxpayer controls the return or losses on investment so that the returns or losses are like those experienced by unquestionable commercial businesses. Put another way, the element of chance normally associated with gambling is significantly reduced. Case K25 provides an example.